Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this July 11th. It's Thursday, U.S. time, and we've seen feed costs, or at least the futures, trending down since May for most of the feed products everywhere in the world, not just the US, but European feed prices have been trending down as well. And then on June 28th, we got a number of bearish USDA reports, and we've seen US prices shift even lower since then. Usually when I have feed related questions, I go to Kyle Schrod, who's based in the Chicago office. Kyle, can you give us a little bit about your background?
Yeah, thanks, Nate. I actually grew up on a corn and soybean farm. So when I started with StoneX, this is what I was hammering through on a daily basis. We were working with grain elevators and ethanol plants across Minnesota, South Dakota, North Dakota, and this is kind of how I grinded my teeth, I guess, in the early days was working the grain markets.
So, what did the USDA reports show?
It was bearish. And I think, the couple big takeaways that we get from those numbers, stocks are still really, really high from an old crop perspective. Um, so we saw a higher than expected carry out for corn. We saw a higher than expected carry out for soybeans, a higher than expected carry out for wheat. So kind of the trifecta. Everything was higher than what the market was looking for across the board. In addition to that, you flip over to the acreage report, and it was a little bit of a mixed bag. I mean, which is kind of always going to be the case, but the corn acres is what really stood out. They jumped substantially higher, and probably allowed for a little bit more downside from a corn perspective. And the U.S. tends to be more of a driver for the corn market, whereas South America has kind of taken a little bit of the lead, or at least it's more of a split driver between North and South America for soybeans. So soybean acreage came in slightly below expectations, but not substantially so. And it was really the corn acres that stood out and kind of kept everything moving pretty sharply to the downside.
I don't track the crop markets closely, but I saw yesterday that China's actually been buying a decent amount of soybeans. We believe that their bookings for delivery August, September, October are probably above year ago levels, but all of that product, or the vast majority of that, is being booked out of South America. So even the lower than expected soybean acres for the US this summer might not be enough to really push up soybean prices because the exports are still looking fairly weak.
Yeah, I think a lot of it comes down to what that South American crop looks like. Obviously we have some macro issues with China, and their preference will be to avoid buying the products that they can from the US. If they need to refill coffers or build up inventory, certainly they'll come to the US, or if the US gets to a significant discount, they'll come this way. But we've seen a relatively strong US dollar, and that's on top of the preference that China probably already has to avoid a reliance upon the US and avoid buying goods and products from the US, just because of the global tensions, if you will, that are happening on a leadership level. I think the other small thing that's kind of happened here the last couple of weeks is you get into a key pollination period for the grains in early July. And we've had some good rainstorms coming across the country. And so in addition to the bearishness that we got from the stocks report, the market is looking for confirmation that we're going to get continued moisture, and we're going to have enough moisture during that key pollination period. And we've certainly gotten that. Obviously this hurricane, this tropical storm, has pushed up and brought some decent rains to a large chunk of the upper Midwest. And we've just been humid and kind of scattered showers and thunderstorms popping up in a lot of places. So we're not struggling for moisture. And I think the market is feeling more comfortable that, we're going to be able to kind of get through this year with a relatively good crop, at least in terms of our moisture concerns.
I looked up the stats on the percent of the crop that's rated good to excellent. And last week we were at 68% of the corn crop rated good to excellent, which is up 13 points from last year and up 6 points from the 5-year average. So at least in early July, yeah, the corn crop is looking good, better than average, much better than last year. So if we're talking about corn down at $4 a bushel, maybe 4.50 if we could find a little bit of strength in here. Doesn't that push margins for dairy farmers up to some pretty good levels when you pair it with $20 plus milk?
Yeah, I mean, the board margins look absolutely fantastic. And I think the farmers are going to be in a phenomenal position here as we move forward. You know, some of the things that we're still hearing anyways, I mean, our old crop prices and, milk prices that we've seen over the course of the past few months that were substantially lower from a cheese value standpoint. So some of those numbers are still coming through on the balance sheet for producers at the moment. But when you look at the current price levels and you look at the forward curve, the margins look absolutely fantastic.
Agreed. Um, and I'm a little bit surprised that the Class 3 and Class 4 futures have pretty much shaken off this bearish feed situation. We had these big moves down in corn prices, and it really hasn't affected the U.S. market. When I look at the long run correlation between, say, Class 3 milk and the price of corn, $4 corn is something like 16.32 a hundredweight on Class 3 milk. And right now we have Class 3 futures at $20 plus for the next 4 months. Um, Given that other costs for these dairy farmers have increased quite a bit in recent years, maybe Class 3 isn't going to drop that far relative to just feed costs. But it sure seems like with these lower feed costs, we should get better milk production. What's your take on milk production?
I guess kind of two things to unpack there. Milk production will be interesting, and I think, um, you know, my opinion maybe versus what I think the producers would tell you at the moment is maybe a little bit different. I think the economics tend to always win out, but what the producers are telling us right now is that there's just not enough animals out there. There's not enough heifers out there for them to really ramp up production. Slaughter rates have fallen off, so I think they're going to try to increase production as much as they can. But I think that feeds into the reason why the forward curve probably hasn't come down as much, is even though the farmers are looking at it and saying, yeah, this is a really good margin, I think they've still got that recency bias of some slightly negative margins, perhaps over the course of the past 4, 5, 6 months here, before we got, the big move on the class 3 and cheese price. And I think they're looking at it and going, yeah, we've just come up. We really don't see downside because we don't think that there is going to be a big influx or return of milk production because they just don't see the heifers out there. And I think because of that, there's a sense of security, and that's leading to a lack of aggressiveness, if you will, in selling the class 3 or class 4 forward curves. It's just one of those things where I think they kind of believe that this is going to be one of those times where margins could potentially explode and go substantially higher. So I think if they are looking to add coverage, it's in all likelihood it's being added via DRP, and they're not being super aggressive about selling or using the futures board on the class 3 or class 4 side to lock these prices in despite a really strong margins.
It's all fair points, Kyle. I still think we're going to get a little bit of growth out of milk production. You can shovel a lot of feed at these cows at these prices and get better production per cow if bird flu doesn't hold us back too much. But even with my, I think, relatively bullish outlook on milk production, it's still not a lot of growth. And we're going to be stuck with relatively weak milk production growth in the U.S. But I'll leave it there. Thanks for your time today, Kyle.
Absolutely. Thanks for having me.
The StoneX Dairy team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. This communication is issued in the United States by FCM division of StoneX Financial Inc., SFI, by the SFI presenters noted. And the material should be construed as the solicitation of trading strategies and or services provided by SFI. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange traded and over-the-counter, under derivatives, risk management, global payments and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, Company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA, SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P00000-012 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial T. Limited, Co. Reg. No. 201,130,598 RSFP holds a capital market services license and is regulated by Monetary Authority of Singapore Massive for dealing in exchange-traded derivatives contracts, OTC derivatives contracts and spot foreign exchange contracts for the purposes of leveraged foreign exchange trading. StoneX Financial HK Limited C. No. BCQ 152-HK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial T. Limited acts as agent for SFL in Singapore with respect to its payment services business. Trading swaps and over-the-counter derivatives, exchange-traded derivatives and options and securities involve substantial risk and is not suitable for all investors. These materials represent the opinions and viewpoints of the author and do not necessarily reflect the viewpoints and trading strategies employed by the FCM division of SFI, or SXM. These materials represent the opinions and viewpoints of the author and do not necessarily reflect the viewpoints and trading strategies employed by the FCM division of SFI, or SXM. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any derivative or security. It does not take into account your particular investment objectives, financial situation, or needs and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX Group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. The analysis/report is only permitted to be distributed in Singapore to a person who is an accredited investor, expert investor, or an institutional investor as defined under Section 4A of the Securities Futures Act Singapore. Recipients should contact SFP at 65-6309-1000 for any matters arising from, or in connection with, the analysis or report distributed. No part of this material may be copied, photocopied, or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. Copyright 2024 StoneX Group Inc. All rights reserved.